All right, so let's go ahead and get started this morning. Thank you all for joining our webinar today. Looking forward to going over some of the solar incentives on the marketplace and walking you through a sample project that takes advantage of several incentives. Just to introduce myself, my name is Sam Watts. I lead sales and marketing overall for Colite Technologies. I'm based in the Atlanta area. Today we'll be walking you through a sample commercial solar project and demonstrate how renewable energy incentives can significantly impact a project costs. We are recording this webinar and it will be available to review on our website or to other folks as we go along. And of course, you can always reach out directly with any specific questions you may have. At the end, we'll have some contact information available, and certainly we're always here to answer any questions. So with that said, let's find out, is it possible to install solar with a 1-year payback? As we all know, the biggest objection sometimes with solar is, hey, this is 8 years, this takes 10 years to get my money back as a business. This year, a lot has changed. Let's change that equation. So agenda, we're going to just go briefly over who we are, and that's only going to take just a minute. And then we're going to go dive right into some of the incentive information, as well as talk about some of the financial analysis that comes out of these projects when they're combined with incentives. At the end, we will take Q&A, and feel free to put Q&A into the chat as we go along. It's always good to have these events be interactive. Please note, we have to say this, this webinar is for example purposes. I am not a lawyer or a tax advisor. Know a lot about it, but consult your legal counsel and tax advisor as to your particular situation. And if we end up engaging on a project, certainly, that's something we can help with. Diving in, let me introduce Colite Technologies. We are a solar EPC. We're based out of Columbia, South Carolina. We serve the southeastern and mid-Atlantic regions of the U.S. I always like to say we're a southeastern-based company with the ability to scale globally. The company started in 2017, but we began our solar journey in 2019 and have since installed over 7.1 megawatts of solar capacity, all in commercial. Our product portfolio includes commercial industrial solar systems, off-grid, renewable energy powered off-grid lighting systems, complete indoor and outdoor LED retrofits, and electric vehicle charging stations. One thing to note on these projects, and many of you may already know this, is many of the incentives we'll talk about today can actually be applied to a variety of renewable projects, not just solar. So for example, our off-grid lighting poles here that incorporate solar and sometimes wind. You see one here at the Pro Football Hall of Fame in the lower right, and others. We've got these all over the U.S. They're also eligible for many of these same incentives and can often make them more affordable than traditional outdoor lighting technologies. Last slide about us. We are, as I said, Southeast Mid-Atlantic based, electrically qualified in about 12 states, but certainly can work with partners outside of that. We performed over about 200 projects, maybe more than that at this point, in a variety of renewable areas. We have staff as far north as Washington, D.C., and as far west, I'd say, as Alabama right now, though we can serve certainly into Texas and Mississippi, down into Florida, and everywhere in between. So that said, it's enough about us. We're going to use kind of a sample scenario here. So the way this is going to be set up is we're going to talk about a sample project. And I understand that some of you all may not be in South Carolina. That's fine. I'm not either. Or your project may be somewhere else, but we'll just kind of zero in on a specific example and dissect the meaning in this kind of statement and that the slide is showing. As you can see, it says, a small business, right, located in a rural, low-income community in South Carolina, decides to install a 100-kilowatt DC rooftop solar PV system, hopefully with Colite Technologies. The total project cost, let's say, is $250,000, turnkey engineered, installed, all of that. And the business owner, of course, wants the most return on their investment. We sell on business cases. We certainly do sell on green, reducing carbon emissions and ESG and sustainability objectives. But our mission is to provide businesses with a terrific return on investment on renewable technologies. Embedded in this statement are very meaningful things. So one, it's that it's a small business. That's important to know. The second would be that this is in a rural community, which qualifies for a certain type of grant that I'm going to get into. Third, that this is in a low-income community as defined by the government. This qualifies for certain incentives, and the state matters, as there's sometimes state incentives as well. And of course, being a rooftop solar PV system gives certain benefits as well. So this single project that seems fairly straightforward, right, is actually eligible for 4 different renewable energy incentives. Cover the first one, and this one is fairly the most common incentive in the solar landscape or the renewable landscape. This came this year with the introduction of the Inflation Reduction Act, which many of you may be familiar with. Not sure how much it did for inflation personally, but it's a very good energy bill, and that's primarily what the majority of the bill is about. And inside of that, it defines something called the investment tax credit. It's been a huge catalyst for renewable energy deployment in the U.S., especially recently. Simply, it's a very simple credit. It's a 30% tax credit that businesses can claim for investing in a renewable energy project. This means you can take 30% of the project cost, deduct that amount from your federal tax liability. So for our example here, $250,000 project, 30% of the cost, $75,000. So the project owner has a $75,000 federal tax credit, not deduction. Credits are directly paid or directly beneficial dollar for dollar to federal taxes. And that can actually be taken over several years. It doesn't have to be taken all at once. It can be deferred, and there's some other things around that. Thanks to, as I mentioned, the Inflation Reduction Act, there is a 10% bonus adder to the investment tax credit for projects that are located in low-income communities. So if you turn your attention to the right side of the slide, you'll notice that all of the green areas in our great state of South Carolina there are eligible low-income areas, and it's a lot, and you really look at it, it's probably what, like 50% of the state or more is considered low income, and that's going to vary, from state to state. But here, there's a tremendous opportunity to get that additional 10% bonus adder, and that is stackable to the investment tax credit. So you're at 40%. So, there are some of course, some complications to this. We keep up with all the latest guidance from Treasury, DOE, USDA, and other federal agencies that define these programs. So the project size, must be less than 5 megawatts. I'd have to say that, for C&I, not utility scale solar, less than 5 is probably going to be the vast majority of the projects. And there's actually 4 different categories of low-income communities that can apply for the bonus. Our sample project here qualifies for Category 1, an area with a poverty rate of at least 20%, or the median family income does not exceed 80% of the statewide median family income. So, bottom line, we multiply 10% of our $250,000 project and get $25,000. That $25,000 is added to the $75,000. So at this point, we're at $100,000 of tax credits, fairly, just with 2 incentives right off the bat. So this slide talks about a specific credit for South Carolina. As I mentioned, we work in many states, and there's different credits, and some states have renewable energy credits, and there's all sorts of things going on. But we'll use this example in our home state of South Carolina to kind of drive the point home. So many states do have their own tax credits and incentives. South Carolina specifically has a 25% corporate tax credit for solar energy. Now, there is a maximum to this. It's not super high, but still up to a maximum of $35,000. I mean, it's not insubstantial. So here we would take the $250,000 project cost, multiply it by 25%. That's $62,500. But of course, we have the $35,000 project maximum for the credit. So we'll take that $35,000. This is actually spread out over 10 years. So it is a $3,500 per year for 10 years to get the full $35,000. And we'll show that in our ending financial analysis at the end of the webinar. So this sample project will receive $3,500 every year for 10 years and receive a total at the end of the day of $35,000 for just the South Carolina Corporate Renewable Energy Credit. And of course, this is stackable with the ITC we talked about, the investment tax credit, the low income credit. And there's also some other things we're not going to talk about today, like economic opportunity zones and other incentives that can stack onto these credits. Feel free if there's any questions so far, let me know. I'm going to move into MACRS depreciation. Many of you may be familiar with depreciation, of course, or may remember it from an old college course or something like I have to think back to my managerial accounting. But basically, it's just depreciation assets. Normally, this is in a straight line, takes a while, and provides certain benefits to businesses. Here, the MACRS Modified Accelerated Cost Recovery System is what this stands for. I'll say it again: Modified Accelerated Cost Recovery System enables businesses to recover investments in certain property through depreciation deductions. Of course, this is where your tax advisor can be beneficial. We're kind of simplifying this a little bit, but we're going to show both the straight line depreciation as well as bonus depreciation, which will be on the next slide for example purposes. So a solar system, and this gets a little bit technical, but I'll go through this a bit. So solar system is considered a 5-year property. And that's important because that's kind of influences the schedule of which the depreciation can be taken. Now, we all know solar systems have a useful life of 25, 30 years at this point. The warranties on panels are out 25 years, et cetera. And even at that point, they're still at 80% of their useful life. So, 5-year property, that just happens to be how it's defined. And the depreciation schedule is set by the Internal Revenue Service. If you're claiming the investment tax credit, you have to reduce your taxable basis by 1/2 of the ITC value. So for our example, $250,000 project, we subtract the $37,500 and get $212,500. And that's half of the investment tax credit taken off of the project cost. So $212,500 is your taxable basis for the accelerated depreciation claim, and the number that we'll be using today for our depreciation calculations. You can see we have a schedule here on the right side of the slide. You simply apply the MACRS percentages to the $212,000, 500 to get the depreciation amounts for each year. This is fairly straight line depreciation. So you can see the depreciation percentages are fairly level. They do vary a bit over the years. You multiply the appropriate tax rate, of course, to the depreciation amount, and you'll get the tax savings for each year. We're talking about federal corporate income taxes here, so the tax rate would be 21%. As a note, this program can be used for both federal and state taxes. Same process, but different tax rates. For example, if you were to use this program in South Carolina for your state taxes, it would be a 5% multiplication with the state, which is the state corporate income tax rate. So in the end, bottom line, the project owner is going to avoid paying $44,625 in federal taxes, and that will help recover some of the investment made in the solar system. So let's look at the other way to do this depreciation that's even more aggressive. So, and this is only applicable to federal taxes. This does not apply to state taxes. For your federal taxes, you can use bonus depreciation instead of straight line depreciation. Bonus depreciation lets you depreciate a greater amount in the first year and the remaining amount in the following years. The benefit is the ability to recoup more of the project costs earlier in the property life, which of course is going to result in a faster payback period, and we'll show that at the final calculations. The amount of the bonus depreciation is determined by the date the project is placed into service. So it started at 100% in 2022, and it's actually decreasing by 20% every year after that. So there is some urgency. If you're if you have a project you're thinking of or want to see if it pencils out, there is some urgency in taking advantage of this, as every year the government has decided this is going to go down. This is actually going to decrease by 20% each year. So right now in 2023, as we stand, the maximum bonus depreciation you can take is 80%. You see this goes to 60%, 40, 20, and then 2027, this program is phased out. So our sample project assumes a placed in service date sometime in 2023. It doesn't really matter if it's the last day of the year or the first day of the year. So we could take 80% bonus depreciation for this situation. So very simply, remember some of these numbers. We're going to multiply 80% by the taxable basis. We remember our taxable basis had to do with the ITC. We had calculated that at $212,500. That times that equals $170,000. So that's your bonus depreciation in year one. That's a pretty big number. So you subtract $170,000 from the total taxable basis of $212,500, and you get $42,500, the remaining taxable basis of the project. And from there, you apply the regular accelerated depreciation schedule to that $42,500 after you've taken that big 80% chunk in year one. Yeah, so that's pretty much how it works out. You continue that process, and you can see the charts here. But this is a very powerful program. There is, like I said, a time limitation on it. So, if you have a project this year that you want to get off the ground or get mechanically complete, you get 80%. If you wait till next year, it's going to be 60%. So it will make a difference in the financial business case for projects. Okay. So this is probably the most powerful incentive on the market today, even after we talked about all the stackable credits for the investment tax credit, some of the things that came in with the Inflation Reduction Act, the accelerated depreciation, and other programs and aspects. But this particular program is something that that we are very excited about, and one that we are doing a tremendous amount with. And I'll kind of note before I start on this is something that Colite Technologies will do on your behalf. If you don't get the grant, we won't charge you anything for it. So this is something where we're somewhat of an expert on. This is the REAP grant, that stands for Rural Energy for America program. It's actually not done by the Treasury or anything. It's actually a separately funded program by the U.S. Department of Agriculture. And it's intended to bring more renewable energy to rural parts of America. REAP offers grants and loans for agricultural producers and rural small businesses. So I'll say it again, agricultural producers and rural small businesses investing in renewable energy systems or energy efficiency improvements. So that could be lighting, that could be solar, that could be one of our off-grid wind or solar panels. And I believe it could also be some electric vehicle chargers. Totally sure on that, but probably. But this grant can get you up to 50% of your project paid for, up to $1 million. So it's a big number. So, we're talking, if you have a $2 million project, this thing can pay for $1 million of it. So pretty much, this program has been a kind of a game changer for areas and businesses and the agricultural producers and small businesses that qualify for it. As obviously getting half of your project costs covered is fairly powerful. Eligibility, you got to be an agricultural producer with at least 50% of your gross income coming from agricultural operations, or a small business in an area with a population less than 50,000 people. Right here, as in the great state, South Carolina, as we've been talking about, the eligibility map. Notice that the light orange areas around the cities are the ineligible areas. So every other spot, not the green areas, those are actually forests and parks, so ignore that. The orange areas are the ineligible areas. So, in Georgia, here in Athens or Columbia, South Carolina, or our home city, or Charlotte or something, those are not eligible. But a little blip there. 95% of this example is eligible. So the application process, wrong button. The application process is, it's a little bit complicated, but like I said, this is something that we can take care of, for you, and we're doing a lot of these right now. So this is a very popular program, and something that should be taken into account. Unlike some of the other programs as well, there is a limited bucket of money. So the USDA, has a good bit to give out, and my knowledge is that all of the programs that were applied for in the last quarter nationally were approved. But that won't last forever, as we know. So there is some time urgency in getting these grants in. It's a quarterly application process with a quarterly approval. So, how that goes. So definitely some urgency taking advantage of it. So I'm going to show 2 slides with financial calculations, and then we're going to pretty much get to the end of the webinar and take Q&A if we have any. So here's cash flow, a 10-year project. We've been talking about this $250,000 project in South Carolina. It was for solar, rooftop solar. And this is going to assume that we have the REAP grant. So we have the upfront cost, we know that. In the first year, we have our REAP grant coming in, paying for 50% of the project. That's $125,000. We also, of course, have energy savings from the solar system that's hitting immediately. And in this example, with the size of system that we have, that would be $15,000 of energy savings. And we, accounted for an energy escalation rate of 3%. Energy is going to likely rise much quicker than that for most wherever you live. I know here in Georgia, my bill is going up about 12% next year because of some nuclear plants we have and some other things. But we here at Colite Technologies, we always use a conservative number. We try to present a very realistic scenario and not kind of have like smoke in the sky. So 3% is what we're using here, which again is a very, very conservative number. So we're looking at the federal tax liability. We have the investment tax credit that we talked about that provides us with $75,000. And then we have the low income community bonus, that's $25,000. Then we're going to take our bonus depreciation that's going to give us $37,000 in the first year. So really, at the end of the day, when you start looking at this and you add in the South Carolina's corporate state credit and the state depreciation, you're getting a 1-year payback. And that's kind of the question we were kind of starting with this webinar was, is it possible to have solar with a 1-year payback? And the answer used to be definitely no. But now, with the right situation, that's actually fairly common. It can be yes. So you see the internal rate of return here and other financial metrics are just fantastic. This project is one that if I was the business owner, I would say to them, or I was advising the business owner, I'd say, if you kind of don't do this, it's kind of almost a bad business decision. This is something that's just so good. You're getting, pretty much the entire thing paid for through grants, depreciation, and credits, tax credits. Let's say you didn't get the REAP grant. So, this is our last slide here. If you don't get the REAP grant, so we didn't get it, or we're not in an eligible area, or USDA runs out of money, or they change the rules, that can all happen. But with the most common incentives, and let's assume we're not even in a low income area. So we're just in wherever, right? We're sitting beside our office or something there in Columbia. That's what what you typically see with the solar project, $250,000. You've got you've got your federal ITC of 30%. You do get your bonus depreciation, and South Carolina, you have the corporate tax credit. But, your internal rate of return here went from 37%, 9% without the REAP and some of the other things. And so you do end up with more of a typical 7-year payback. So, which is still great. I mean, still, you got a 30+ year system and you're going to be in the green very quickly. And there's a couple of different ways to structure this, of course, through financing or power purchase agreements or other things that we can do as a company to make you cash flow positive in year 1. But essentially, that's what we're looking at. So, the math shows, solar is a great financial investment. The solar system will keep producing energy for a long, long time and continues to offset the amount of energy purchased from the utility. So that's the end of the webinar there. Mandy, do we have any questions at this time?
We do not have any at the moment, but we can give everybody a couple minutes if they have something they want to type into the chat or Q&A, whichever one works.
Okay. Yeah, no problem at all. Certainly we're here to answer any questions that you may have. Certainly enjoyed our time today going over some of these powerful solar incentives. Here is our contact information. Of course, you're welcome to reach out directly to me. But we have a whole team of people, hardworking folks that are ready to help. So
we do have one question, Sam.
Yeah, yes. I see the question is this only for commercial projects? And the answer would be yes. For the most part, many of these incentives are only for commercial projects. Residential is kind of its own area. We actually don't do any residential work at all. But the majority of these incentives are commercial and industrial related. But like I mentioned, they're not just for solar, they're also for lighting, they're also for electric vehicles, they're also for off-grid lighting, lighting and energy systems and other areas. Yes, battery storage is part of the incentive landscape and would be eligible for many of these incentives. Now, I'll make a comment. We have an extra second on batteries. Batteries are, of all the components, let's say in solar, batteries are still the kind of the most expensive per watt thing. So we do use them in some projects where they're truly needed, but but typically that's going to be a tough sled. They are coming down as we see the domestic investment that's happening with batteries across the United States, particularly in the Southeast. I mean, if I drive around some pretty large factories, battery factories around, there's so this will come down. But batteries are kind of that last component that needs to kind of come down to where it starts making more financial sense. So the panels are in a pretty good spot, inverters are in a good spot, et cetera. And we're pretty cost efficient on install and engineering and all of that, as are some of our competitors as well. But batteries definitely still sort of expensive. I saw a comment. Yeah, appreciate the positive comment there. We'll look to do some more of these in the future. Unless there's any more questions, I'm going to go ahead and end the webinar today. I appreciate all of your time and thank you for joining today, and it's been a pleasure.